In its 75th year of independence, India is at the beginning of a multi-year growth path. The country's global rank in agriculture, business and industry are all in the top 10, along with the second largest workforce in the world, with over half of India's population below the age of 30. This has created a sweet spot for the astute investor, where profitable opportunities await over the long term as long as one picks the right companies to ride the wave. And sometimes, this is simply a matter of choosing the right fund at the right time to invest for you. Which brings us right to the JM Midcap Fund. India's Nifty 150 Midcap Index is more comparable to global indices like the US Dow Jones and China's MSCI Midcap than even our own Nifty 50. This is because our Midcap Index has a better representation of sectors like healthcare, consumer discretionary, and industrials. To that extent, the Midcap Index has a wider representation of the economy and is more in sync with industry and global markets. Midcaps also give us opportunities to invest in new economy businesses like e-commerce, online brokerages, quick service restaurants, and gaming. A combination of mid and small caps give us exposure to high growth stories like asset management companies, diagnostic labs, and staffing solutions. Many of these wonderfully performing opportunities are simply not available in large cap companies. When it comes to valuations, the Midcap Index now trades at a PE multiple of about 16 on a one-year forward basis. That's at about the long-term average, making them attractive compared to a peak of 23 that we've seen only a couple of years ago. And given stronger balance sheets over the past couple of years, there is every possibility that potential PE expansion will give us a rise in valuations. Then let's look at balance sheets. The big grouse with some midcaps is that they have too much debt. While companies in the Nifty 150 Midcap Index during 2014 to 19 had a debt-equity ratio of about 0.5, give or take, they are now at almost half that level, at 0.27, indicating a substantial deleveraging and much better cash flows. Midcap profitability has also doubled since 2015. All of this pointing to better balance sheets at a time when valuations are not high and the next growth wave is clearly anticipated. The one thing we must definitely keep in mind when it comes to investing in midcaps is the sheer power of compounding good companies achieve. Companies give their maximum returns when their market caps are below 30,000 crores. What that translates to is that over a 10-year time frame, midcaps have been able to generate more than twice the wealth that large caps created. For us as investors, a large part of being able to participate profitably in the markets is being able to pick the right stocks. Which is why it's important that we have the right team researching, selecting, and monitoring stocks for us. The team at JM Financial Mutual Fund running the Midcap Fund comes with talent and abilities that only knowledge and experience can buy. We've invested through the global financial crisis, the taper tantrum, and COVID swings. Our GQ model of investing, where GE stands for growth of earnings and EQ stands for earnings quality, along with the size of market opportunity, R&D spends, corporate governance, competitive positioning, and management quality, allows us to select opportunities that stand the test of time. The investment process at JM goes well beyond crunching the numbers. That's just the beginning. After which comes due diligence, regular management meetings, and consulting with domain experts. All of this is followed by a stringent portfolio monitoring process, leading to additions or deletions from your portfolio. The portfolio focus will be on high-quality, capital-efficient growth companies with low debt and clean managements where businesses provide consistent compounding across market conditions. As an added advantage to investors, the JM Midcap Fund offer has an integrated systematic transfer plan. If you so choose, this allows you to invest into the JM Midcap Fund in installments over a 3 or 6 month period, transferred from one of our shorter-term debt funds where your money is parked. This will allow you to ride out any volatility in the markets and average your entry price. There's something to be said for investing in the right fund at the right time. It strengthens your portfolio, allows you to ride out market cycles with the help of high-quality investments, and compounds your returns over the long term. And the JM Midcap Fund is exactly that. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.